Endurance Technology, because yesterday when they announced and informed the exchanges that the company is planning to diversify, the stock tanked. In the conference call, they've said that, look, the plans of diversification have been put on hold and the stock has come back. So what really was the thought behind the announcement and the thought behind the withdrawal? And we're going to have a very frank conversation which will cover all corners with the management of Endurance Technology. The CEO and Executive Director, Mr. Ramesh Kayane joins us. He represents Endurance Technologies. Ramesh, good morning. Thank you for joining us. I'm just going to take step by step. Let's first address the chain of events. During the market hour yesterday, Endurance Technologies informed the exchanges that they plan to diversify into the tire business. The stock collapsed, and during the con call, the management has indicated that they plan to put their expansion on hold. So I just want to understand the thought behind the first announcement and behind the second announcement.
Well, good morning, everyone. I know this is a very important question for the viewers. The first information which we gave to the stock exchange was after our board meeting was completed. It was an enabling resolution which we said that we find merit in doing a tire business, and that's why we said that it is just a proposal. While we still are evaluating the financial proposals and other things for the tire project, we would just like to have a principal approval. So we got a principal approval. Then later during the day, leaving aside that the stock tanked to the lower circuits, leaving aside that, we had a con call with our investors, which is a normal procedure that after the board results, we normally have a con call with our investors. During that con call, we found that the reservations from our investors is pretty strong, as we respect that they've got past experiences based on their analysis on patients. And they requested us to reconsider our decision. And post to that con call, we all sat down together and we once again evaluated the whole procedure, and paying due respect to our investors and their wisdom, we again reconsidered, and we finally decided that if our investors are not comfortable with this project, then we have got no hesitation in stopping back. And this is what we have written to the stock exchange again.
I'll come to whether the investors were happy or unhappy with your decision, Ramesh, but let's take it from the top first. What prompted the management to even think of this kind of a diversification into tires, firstly? What was the rationale behind even getting that in-principle approval? I'm sure it may have come from the thought that at some point maybe we would like to diversify into the tire segment.
Well, it is just it is a combination of many things. If you look into the EV business becoming probably a reality in a couple of years, it's very obvious that we had to think of another product line which takes care of the disruption that may have on some part of our casting business and some part of our clutch business. So it was an advanced sort of preparation that we had in our discussions, and these were preliminary reviews. Now, it doesn't mean that we would have gone ahead with the project, because I would like to definitely tell everyone around that Endurance is a very focused company as far as profitability and performance is concerned. We would never ever take a decision to go ahead with any project which challenges our profitability and performance margins.
Now, the decision of foraying into tire is a board decision. I'm sure you must have done your cash flow projections, your numbers. You must have taken notice of what SEAT, MRF and Apollo is doing. Do you think it's a right strategy to hear your investors out and defer your decision? Because investors in this case, they will be focusing on the stock price. They have a 2-year time frame, they have a 3-year time frame. Is it a wise decision to listen to your investors and defer something which may cost you a little bit of capital and margins when you're rolling out your tire business, but essentially is important for your survival?
It's a very limited way of thinking. See, what happens to the stock is only an impulsive reaction to everything. At the end of the day, we can't ignore what our investors say, and it's not any kind of pressure. It was their strong suggestion, and earlier we found merit in taking up the project and further evaluating it. Again, I'm repeating, it was only at an evaluation stage. It was not that we went ahead with the investments. So it was only at an evaluating stage, and once we've got a strong reservation from our investors, we had to rethink it over. I think it was fair to take their opinions into play and take a reverse decision.
If somebody is getting a thought based on your yesterday's communication and today's interaction that EV in two-wheelers is a reality, what does that mean for your existing business? Let's imagine that you don't expand, you don't diversify, you stick to your current knitting. And if that core knitting or the pie of that business gets reduced or will get reduced or disrupted in the next couple of years, what happens to your existing business and future projections?
See, let me tell you, our existing business is absolutely safe. We are well ahead on our expansion plans as far as suspension, transmission, and brakes are concerned, and we've got very firm orders from our OEMs who trust our business profile. It's only when, if at all, the discussions on EV has been so strong in the past 1 month or so that it was very obvious that any person who's got a casting business and that too engine components would start thinking on an alternative strategy. Now, if in this alternate strategy, tires was one of the options that came in between, it was worth reviewing it. There can be many other options that come into our discussion. Now, what gets disrupted is only castings, and that's only a small part of what gets disrupted because it's 110 cc and below, which gets, but the 150 cc and above bikes will still be there. So it's just a preliminary, it's an exercise which any industry or any company would do.
Ramesh, assuming that you got the shareholder nod, what would have been your initial investment into the tire business as opposed to the revenue projection?
Well, it was 175 crores. That's what we had written in our letter to the stock exchange. The investment would have been 175 crores in the first 3 years, and we had in our revenue projections after 3 years we were expecting 250 crores out of that.
If not tires, are you looking at diversifying into other businesses? Would you be giving a serious thought to some other diversification?
Yes, why not? We are always open to new opportunities and expansion of business. We've got no hesitation in taking forward any project which makes sense to our business model and our way forward to expansions.
Tell you my sense, Ramesh, and this is purely my sense. The reason why investors got nervous is because tire industry is a very competitive industry, highly cyclical industry, highly dependent on commodity prices, and margins are not even at the best of the time more than 20%. So now would you be looking at diversifying into a tough business, or you would be looking at diversifying into a high margin business? The top line may not be all that appealing or great, but your margins would be high.
No, that's only one way of thinking about it. Even if I look into the tire business that you're talking about, there are some companies who are doing good margins. See, at the end of the day, what is important? It is QC, DD, MM. How the OEMs look at you. If we have got our strategies right, if we have got our operational strategies right, making good money out of any business is just a matter of operational excellence.
It's an excellent point, and somewhere I would give full marks to endurance, because auto ancillary is a tough business and your margins have been one of the best in the industry. Let's talk about the current slowdown. Yesterday we had the management of Mahindra & Mahindra. We had the management of TVS couple of days ago on the show. They are now admitting that the slowdown has started hurting them. They are looking at reducing their temporary staff. They are looking at reducing their total output. They are looking at cutting production. What is the sense you're getting from some of your buyers?
Well, the slowdown is true because the auto industry has come down by approximately 10%, to be precise, on 16% on scooters and around 6.4% in motorcycles. Overall, the industry has come down by 10%. It's just because there was last year the base was quite high. Q4 of last year was the upsurge when it started. Then we had H1, a good H1. But then the factors that compelled the consumption patterns to go down were many. Some of them was elections, some of them was interest rates going up, finance not being available. So there were many factors to this slowdown. Now it's very obvious that growth was not sustainable. So today, if we compare ourselves to the current performance to the previous year's performance, the base of last year is quite high. So sustaining that level of growth was definitely a challenge. So today we are seeing a bit of a slowdown. I would say it's a correction part of it. Secondly, what I said earlier, that last year the industry made somewhere around 24.42 million vehicles, which comes to an average of around 2 million. If you look into Q1, 5.9 million vehicles have been made, which comes to an average of 1.96. Now that is just a difference of 3.5%. So if we all sail through with the same average of last year, I think we still have got a good year ahead, with some extra sales coming during the Diwali period. The only speed breaker that I see ahead is the BS6 implementation.
Of the view that the disruption in the two-wheeler industry, especially electric two-wheelers, is something which is a reality and something which could hit us and change the dynamics very soon. We are talking about EV only in car. That's the first thought which comes to your mind. But I also know that there is a lot of investment which global companies are doing and local companies are doing to come out with two-wheelers which are EV based.
Yes. See, two-wheeler, electric two-wheeler becoming a reality is just because that today we find that the intensity of discussion has increased. As far as the discussions were concerned, earlier also people were taking China as a reference that the electric vehicle should be there, and then there were lot many discussions on the last mile, transportation and mobility. So there have been many intense discussions on the electric scooters and two-wheelers. Now what has happened ever since this, the Niti Aayog has pushed it hard that they are going to come into, they are going to enforce this two-wheeler electric thing. So everybody has started viewing it a bit more seriously, and they're looking into what really can, how the implementation plan can happen. Although there are still a lot of unanswered questions on the implementation of two-wheeler electric, but nevertheless, I think everybody has started preparing for that, and so have we.
Just wanted to understand, Ramesh, I'm sure you're penciling in the best case scenario and worst case scenario, as any businessman would do. What happens if up until October, till the festive season, things don't revive? What happens to your margins, your revenue projections then?
That's a very good question. See, our strategies have been a bit different. If you see that the industry has not performed well, but still we have shown a 3.5% increase in our revenues, and the margins have also improved. The business opportunities which we had earlier, or the business awards that we had in the previous years, have now matured out. And we have got, last year we acquired businesses of somewhere around 1,034 crores. And all of them are going to be maturing out right up till FY21, Q2 of FY21. So I think we are in a safe position unless the market goes considerably down where our capacities are also hurt and it becomes difficult to sustain. I don't see anything of that sort happening unless or until the festive season hits us bad. I don't think that also will happen because we are having a good monsoon ahead, and there are some positive signals that yes, the consumption patterns may increase.
Wrap it up with one more question. You have a very deep understanding of the two-wheeler industry because you are in that business. What is your understanding of the inventory level? When I'm asking you this question, I'm simply trying to understand from you that at the OEM level, at the retail level, and at the supply chain, how essentially are the inventory levels? Because they would tell us the true picture.
Yeah, that's there are two answers to this. First of all, as far as the supply chain is concerned, where we belong to, that's the tier 1 and below, we get a monthly schedule from the customers. So we can immediately cut down our production or add on to production based on the schedules that we receive. So inventory is something that the supply chain controls very well. What is not in our hand is the consumption pattern of the vehicle sales. Now that is where the OEMs would be able to give a better answer that how much of inventories are available at the dealer stock and whether they are going to really hurt the consumptions during the coming months. I understand from the news channels and some discussions with the OEMs that the inventory level is up till 60 days or probably a bit more in some cases, and which is just about normal to build up for the festival period.
Right. Okay, Ramesh, thanks as always for joining in, and glad that you're coming in on television, really clarifying why the decision to first get that in principle, not to diversify into tires, and then that sudden rollback as well coming in. Good to speak with you as always.